Good morning, students. Today we are going to discuss about the terms used in non-trading organizations, that is revenue expenditure, what is meant by revenue receipt, differentiate between capital expenditure and revenue expenditure, differentiate between revenue expenditure and revenue receipts. In the previous class, we discussed about what is meant by trading and what is meant by non-trading, what are the accounts prepared in trading and non-trading organizations, and trader always look after for earning profits, and non-trader always look after for to serve the needy people or poor people or financially weak people or below poverty line, like that. Okay, so see here, revenue expenditure. Already we discussed what is meant by expenditure in the previous class. So one word is added, that is revenue, but totally revenue expenditure to meet day-to-day expenses of concerns. Day-to-day expenses comes under revenue expenditure. Day-to-day expenses means some stationery, postage, telegram, like that, small expenses. Arise the normal course of business or recurring in nature. Revenue expenditure is one accounting period, means it belongs to only for one accounting period, means current accounting period, for example 21 to 22, like that, or 20 to 21, or 19 to 20, or 20 to 23, means only the expenditure belongs to that current year only. Okay. Examples of revenue. Expenses on repairs, renewals, replacements for maintaining the existing fixed assets. Purchasing the fixed asset means it comes under capital expenditure, means purchasing the item, it used for more than 10 years, means longer period, it comes under capital expenditure. Whereas some modifications or alterations or repairs to be done to fixed assets, it comes under revenue expenditure. Okay. The purchase of goods for resale and for consumption, such as bar materials, food, cigars, medicines, legal expenditure, freight and carriage, advertising, etc. Okay, these comes under revenue expenditure. Next, salaries, wages, rent, taxes, light charges, audit fees, depreciation, fixed assets, interest on loans, and miscellaneous expenses. Brokerage on stamp duty, development expenditure, raw materials and stores, etc. Next, same as revenue receipts, means the receipt which belongs to only for current year, not future or past, belongs to only current year, that is current financial year or particular financial year. Okay. Receipts other than capital receipts called as revenue receipts, used to meet the current expenditure, they arise the normal course of business. Revenue receipts, example, cash from sales. We are selling the old newspapers. For that, we are getting some money, revenue. It is called as a revenue receipt, right? Discount received is also income. Commission, interest on investment in case of clubs and associations, annual subscriptions, sale of games, articles, receipts arising when the premises are given to other for use or revenue receipts. Revenue receipts include revenue receipts are shown in the revenue account, that is income and expenditure account, while the capital receipts are taken to the balance sheet. Revenue receipts also include receipts of annuity for transfer of a capital asset, lump sum amount, bulk amount received in consideration of reduction of remuneration, compensation received for premature termination of contract, consideration received for transfer of permits, etc. The see here some differences between the capital expenditure and revenue expenditure. See, capital expenditure, the first one is this expenditure benefits the business over for a longer period. Already we discussed capital means it is used for a longer period, more than 10 years like that. Whereas coming to revenue expenditure, it belongs to only for the particular period, one accounting period or particular financial year. Okay, this expenditure is incurred in one accounting period and the full benefit is enjoyed in the same period. Means the benefit also enjoyed in that current year on that year only, or that financial or that accounting period. Now coming to the second one, it includes assets acquired for the purpose of earning, not for resale and improving. Whereas purchasing the fixed assets, that comes under capital expenditure. Whereas increasing the capacity of the current fixed asset or some repairs or modifications to be done to that fixed asset, it is called revenue expenditure. Now third one, examples: purchase of a new plant, additions to the building means some modifications to the building, brokerage, some commission to be paid, long-term loans comes under capital expenditure. Next, here examples are expenses incurred for acquiring assets for maintaining fixed assets in good working order, normal repairs and renewal of plant, rent, wages, taxes, insurance and other trading expenses. Next, all terms of capital expenditure appear on the asset side of the balance sheet. Capital expenditure appear on the balance sheet, whereas revenue expenditure appear in the trading and profit and loss account. Next, this expenditure is non-recurring in nature. Non-recurring in nature. This expenditure is recurring in nature. Differences between capital receipts and revenue receipts. Capital receipts. These include capital of partners or shareholders' loans raised, sale proceeds of any fixed assets, etc. Coming to revenue receipts. These include cash from sales, discount received, commission, interest on investment, etc. In case of clubs and associations, receipts on account of life subscription, entry fee, government grants, legacy and endowments or capital receipts. In case of clubs and associations, the revenue receipts are annual subscriptions, means that is only subscription is meant for only for a particular year. Sale of games articles, receipts arising when the premises are given to others for use, etc. A receipt on account of sale of a fixed asset is capital receipt. A receipt on account of sale of current asset is revenue receipt. Selling of fixed asset is capital receipt. Selling of current asset is revenue receipt. That is only a light difference. If the receipt is a substitution of a source of a income, then it is capital receipt. If the receipt is in substitution of income alone, it is a revenue receipt. If a sum is received for the surrender of certain right, it is capital receipt. But if the sum is received as compensation for loss of future profits, then it is a revenue receipt. See here, one example is given. Classify expenses into capital and revenue income. So, from the following, we have to find out which one is capital and which one is revenue. Okay. See here, a sum of rupees 4,000 has been spent on a machine as follows. Rupees 2,000 for addition to double the output, 1,200 for repairs necessitated by negligence, 800 for replacement of warm parts. Solution here, 2,000 has been spent to improve the capacity of fixed asset, so it comes under capital account. Okay. Next, cost of repairs whether necessitated due to negligence, it is called revenue in nature. Okay. Replacement of worn out parts neither increases the efficiency nor capacity but maintains the fixed asset in working condition, hence it comes under revenue expenditure. So, assignment, state which item of expenditure would be charged to capital, which is to be revenue. Rupees 300 spent on repairs of a second hand machinery before using it. Rupees 2000 was expended on painting the new factory. Free-trade carriage on the new machine was 300. Erection and installation charges on a newly purchased machine is rupees 500. Okay. See, once again I am repeating here. Revenue expenditure is incurred to meet day to day expenses of concerns arise in the normal course of business or recurring in nature. Revenue expenditure is expenditure is belongs to only one accounting period or one financial year or one particular year. So see here example, expenses on repairs, expenses on repairs, renewals, replacements for maintaining the existing fixed assets, purchase of goods for resale and for consumption, such as bar materials, foods, cigars, medicines, legal expenditure, freight and carriage, advertising, etc. Salaries, wages, rent, taxes, light charges, audit fees, etc. Depreciation on fixed assets, interest on loans and miscellaneous expenses, brokerage and stamp duty, development expenditure, raw materials and stores, etc. comes under revenue expenditure. Next, coming to revenue receipts. Receipts other than capital receipts, it's called as revenue receipts, used to meet the current expenditure. Current means current year or financial year or one particular accounting period. Next, they arise in the normal course of business. They arise in the normal course of business. Revenue receipts, it includes cash from sales. With sales, we are getting some money. It's called as revenue receipt. Selling means current goods, small goods, not selling the fixed assets. If we sell the machine or some building, that receipts comes under capital income. Okay. But whereas selling the goods, it comes under revenue receipt. Discount received. By purchasing some goods from others, we get some rebate from others on that purchase. It is called as discount received. It comes under revenue receipts. For example, commission, interest on investment, etc. In case of clubs and associations, annual subscriptions, sale of games, articles, receipts arising when the premises are given to other for use or revenue receipts. Okay, these are the revenue receipts. It is used only for the current accounting period. It include revenue receipts or means revenue receipts items are shown in the revenue account, that is income and expenditure account. Income and expenditure account. While the capital receipts are taken to the balance sheet, revenue receipts are recorded or shown in the income and expenditure. Whereas capital receipts are recorded or shown in the balance sheet. Revenue receipts also includes some items receipts of annuity for transfer of a capital asset, lump sum received in consideration of reduction of remuneration, compensation received for premature termination of contract, considerations received for transfer of permits, etc. Next, capital expenditure and revenue expenditure differences. This expenditure benefits the business over a longer period. Revenue expenditure incurred for only one accounting period and the full benefit is enjoyed by the same period, means only for particular accounting period or particular financial year. Okay. Coming to capital expenditure, it includes assets acquired for the purpose of earning and not for resale, improving and etc. It does not increase the earning capacity of the business, and it does not bring any asset. Examples of capital expenditure: purchase of a new plant, additions to the building, brokerage and commission paid for procuring long-term loans, etc. Examples are expenses incurred for acquiring assets, for maintaining fixed assets in good working order, normally repairs and renewals of plant, rent, wages, taxes, insurance and other trading expenses. Capital expenditure: all the terms of capital expenditure appear on the asset side of the balance sheet. Means capital expenditure items are shown in the balance sheet, whereas revenue expenditures appears in the profit and loss account. This expenditure is a non-recurring in nature. This expenditure is recurring in nature. This includes capital of a partners, shareholders, loans raised, sale proceeds of any fixed assets, etc. These include cash from sales, discount received, commission, interest on investments, etc. In case of clubs and associations, receipts on account of life, subscriptions, entry fee, government grants, legacies, endowments or capital receipts. In case of clubs and associations, the revenue receipts or annual subscriptions, sale of games, articles, receipts arising when the premises are given to others for particular use. Okay. A receipt on account of a sale of fixed asset is capital receipt. Already, just now we discussed, purchasing a fixed asset, it comes under capital. Purchasing a small goods, it comes under revenue. Okay. Selling a fixed assets comes under capital. Selling a goods comes under revenue or current assets, right? If the receipt is a substitution of a source of income, then it is capital receipt. If the receipt is in substitution of income alone, it is revenue receipt. If a sum is received for the surrender of certain right, it is a capital receipt. But if the sum is received as compensation for loss and loss of future profit, then it is a revenue receipt. For example, classify from the following whether which item is capital and which item is revenue. So we have to find out a sum of rupees 4,000 has been spent on a machine as follows: 2,000 for addition to double the output, 1,200 for repairs necessitated by negligence, 800 for replacement of worm parts. See, solution 1, rupees 2,000 has been spent to improve the capacity of the fixed asset, therefore it should be the capitalized. Cost of repairs, whether necessitated due to negligence or otherwise, is of revenue in nature. Solution: replacement of worn outparts neither increases efficiency nor capacity but maintains the fixed asset in working condition, hence revenue expenditure. Okay, like that. Okay, so today from today's class we understood that what is meant by non-trading organization, what is meant by trading organization, what are the accounts are prepared in both trading and non-trading organizations, terms used in non-trading organizations. In trading organization, profit and loss account, we prepare trading account, profit and loss account, balance sheet. Whereas coming to non-trading, receipts and payments account, income and expenditure account, balance sheet, and terms used in non-trading organization like that. Okay, thank you.